What's up YouTube? Dougie Chong here. Welcome to today's YouTube video where I'll be giving a quick portfolio update based on the current market conditions. For those of you that don't know, I have a simulated stock trading account that holds two stocks that have recently gone down, both Facebook and iRobot, and I will be going over exactly how much of each stock I intend to buy. Now you might be wondering, why should I listen to you if this is a stock that's going down? Or why buy a stock that's going down in general? Well, as I explained in previous videos, this is the method known as dollar cost averaging. This is where you buy a small position in any stock, and then if it goes up, you're making profits, and if it goes down, you are able to buy it at lower and lower price points. So in this situation, I bought some Facebook stock at a certain price, and as it goes down, I can buy more and more and get better value. Of course, some caveats do exist. A company can go bankrupt, in which case you would lose all your money. This is why I tend to invest in either fairly large companies or a company I believe in to a certain extent. I will leave a link to a video explaining exactly why I think Facebook will survive in the future. So Facebook stock now is trading around $201, I think. My first buy I got for around $207. So in this example, if I had put all my money, or let's say 60% of my money into Facebook stock at that $207 price point, I would not have been able to buy it now at a much lower price point of $201. Similarly, now that it's $201, I will not again put in 50 or so percent. I will put in another small amount. This time I'm thinking around $8,000, so around 8% of the portfolio into Facebook stock. That way, if it goes down even further, I can buy heavier. And I still believe in the upside of this company long term, so I have no problem putting more money into it. Another thing that's important to look at is exactly why the company is going down in price. In the example of Facebook, its earnings actually beat estimates, but not by a huge margin. And this is mainly a problem that it caused itself from exceeding expectations and doing well in the past. It is still growing at an incredible pace and still is quite a profitable company. Now let's look at a quick 5-day chart of the Facebook stock. As you can see, around January 30th, there was a steep drop off of around 10%, where the stock fell from around $223 to a little over $205, and now it sits around $201, which makes it a very enticing buy. So now that I went over my Facebook position, I will go over what I will do with my iRobot position that I recently established last week. In last week's video, the price of the stock was around $54, and I actually managed to get it at a price point of $51. Since then, it has gone down even more to about $47. This is where you have to keep your emotions in check. As it's going down, you don't just sell out of it. If you sell out, that's how you lose money. If you still believe in the company, believe it can come back up, then you just buy more. Again, you have to put things in perspective. I believe more in a company like Facebook than a company like iRobot, but I'm willing to put a little bit of money into iRobot. Now let's look at a quick 5-day chart for the stock iRobot. It dropped from around $54 to around $47, which is around a 14% drop, which makes iRobot look like a pretty good buy right now as well. Also, I forgot to mention, I am not a licensed financial advisor. Please do your own research. The only other position in my simulated stock trading portfolio is the ETF VOO, which tracks the S&P 500 index. Now this stock only ticked down about 1%, so it's not a big enough decrease for me to go and buy more. If it goes down about 5 or 6% in the coming weeks, you can definitely expect me to load up some more of this stock. So here are the current holdings of my simulated portfolio. I have 15 shares of Facebook stock, 20 shares of iRobot stock, and 15 shares of the ETF VOO. It is down around $200, but I have not invested that much of the portfolio, and so I have a lot of money left to invest. Here's a screenshot I made of Facebook and irobot stock orders, both for 40 shares each. I'll let you know in the next video if these orders get filled. The Facebook stock order is a little aggressive, but I'm just trying to get some buys in on this portfolio. Another thing I'd like to mention for my fellow Canadian viewers is that while I am reviewing mostly US stocks now, you gotta be careful if you're investing in a Canadian dollar account, because what they'll do, they'll take your Canadian dollars, exchange it to American dollars, charge you an additional fee on top of the exchange rate fee, and then they'll buy the stock for you. And then when you go to sell the stock, they'll do the reverse and charge more fees. What you can do at a bank like TD is open a US dollar account so that you don't keep incurring these fees all the time. I mainly review US stocks for now because historically they've grown more, their economy is just a lot bigger, and there's just more upside potential in the American stocks overall. That's not to say there aren't some good Canadian stocks. I'll like to review some of those in the future, and they can be good, steady plays in your portfolio as well. That's it for this video, guys. Thanks a lot for watching. What do you guys think about Facebook stock and iRobot stock? Let me know in the comments below. As always, don't forget to leave a like and subscribe if you have not already. Thanks a lot for watching.